All right, today we're going to pop the hood on one of the most talked about, most volatile stocks on the market, Tesla. We've got a really detailed technical analysis in front of us, and we're going to break it all down piece by piece to figure out what the charts might actually be telling us. So, let's just jump right in. You know, the big question with Tesla is always the same, isn't it? Is this thing about to take off like a rocket, or is the rally finally running on empty? It is a constant tug of war. So let's see what the data has to say.
And you know what? Let's not bury the lead. Here's the bottom line from this entire analysis, right up front. The big picture, the long-term trend for Tesla, is still pointing up. No doubt about it. But, and this is a really big but, in the short term, things are looking kind of shaky. There are definite signs of weakness. And that tension, that's what makes what's happening right now so interesting.
So to really get a handle on that, we first need to look at the absolute roller coaster this stock has been on lately. Let's map out its recent journey.
I mean, just look at this. From mid-July to mid-October, it's just wild. We start down around $312, then bam! A huge rally shoots the price up to almost $400. But it doesn't stop there. It keeps going, peaking at over $450 before pulling back to settle around $436. That is one heck of a ride for just 3 months.
But here's what's really fascinating. It's the volume. On a massive up day, you see over 168 million shares traded. But look at this. On a big down day, you still see almost 157 million shares changing hands. What that tells you is that the conviction, the belief, is super high on both sides of this trade. You've got tons of buyers and tons of sellers, and that's the perfect engine for all this volatility.
All right, now we're going to get into the technical weeds a little bit, but stick with me, because this is where all the clues are hidden. We're going to make this crystal clear. Let's see what the indicators are telling us about the stock's health.
First up, something called moving averages. Now, don't let the name intimidate you. It's really just a way to smooth out all the day-to-day noise in the price so we can see the real underlying trend. Here's a great way to think about it. The daily price is the stock's short-term mood, but the moving average, that's its long-term reputation. And we're here for the reputation.
And this table just lays it out perfectly. In the short term, the price is just a little bit above its average, which is, a mildly bullish sign. But the really crucial one is the long term, the 200-day average. The price is trading way, way above it. We're talking over $100 higher. That is a powerful, powerful signal that the long-term uptrend is absolutely intact.
Okay, so things are looking good, right? Well, not so fast. This is where the plot thickens. The trend indicators are all screaming uptrend, but the momentum indicators, the ones that measure the speed of the price change, they're weakening. It's kind of like a car that's still rolling forward, but the driver has taken their foot off the gas. The forward motion is just losing steam. So if you put all these signals together in one simple picture, this is what you get. The overall trend, bullish, but the momentum, weakening. Volatility is high, so expect big swings. And volume is just kind of neutral. It's a total mixed bag. It tells us the market is basically hitting the pause button, trying to figure out where to go next. And all of this brings us to what might be the most important part of this whole analysis, the price battleground. This is where we pinpoint the exact levels where buyers and sellers are digging in their heels and getting ready to fight. Let's break this down. First, you have support. Think of it as a floor price. It's the level where buyers tend to show up and say, okay, this is cheap enough, I'm buying. For Tesla, that floor is right at $434. Then you have resistance. That's the ceiling. It's where sellers tend to take their profits off the table. That ceiling is at $456. These two numbers are the lines in the sand.
And where's the stock price right now? Look at that, $435.90. It's sitting just barely above that support floor. It is literally balancing on the edge of a cliff. So the big question is, what happens now?
Well, based on everything we've seen, there are really only 3 ways this story can play out from here. The bullish path. The price finds some strength and smashes through that ceiling at $456. The bearish path. It fails to hold the line and falls right through the floor at $434. Or the neutral path. It just bounces between those two levels for a while, kind of treading water and building up energy for its next big move.
Okay, let's put all these puzzle pieces together and get to the analyst's final take on this whole situation.
So let's just quickly recap the main points. 1, the big picture long-term trend for Tesla is still positive. 2, the short-term momentum has hit the brakes, which means we could see the stock just go sideways for a bit. 3, and this is the most important one, The price is at a massive fork in the road, squeezed between that floor and ceiling. And finally, don't forget that volatility is through the roof. We're talking potential daily swings of almost 20 bucks.
And that leads to this really important quote from the analysis. Risk management is essential given the current volatility levels. Now, this isn't financial advice, of course, but it is a powerful reminder from the analyst that when the market is this choppy and you're at such a critical point, having a plan is more important than ever.
So, here's where we're left. You've got this strong long-term trend in an epic tug of war with weakening short-term momentum, and it's all happening at this one critical price point. The technicals are basically in a stalemate, which leaves us all with one final, fascinating question: what story will Tesla's next chapter tell?